Unifi, ticker UFI, just posted their Q4 fiscal 2026 results. They beat on revenue, but missed on consensus EPS. Revenue hit $144.22 million, topping the $139.75 million estimate. But the EPS came in at a 6-cent loss, completely missing the expected 5-cent profit.
Yeah, but looking forward, management is actually expecting year-over-year sales and profitability growth for fiscal 2027. They made a point to emphasize they're operating from a much healthier financial position today.
Right. And how did the market take it?
Shares dipped roughly 4.7% down to $7.65 immediately following the mixed results. Though, I mean, if you've been tracking them, you know the stock is still up over 130% year to date.
Exactly. So for today's deep dive, we need to figure out if this synthetic yarn giant is actually topping a corner or just, slapping a Band-Aid on a bigger problem. And to understand that, we really have to look past that headline EPS miss and focus on the operational drivers.
Totally. Because if you look at their margins, the underlying mechanics tell a completely different story. I mean,
Yeah.
Unifi saw a dramatic gross margin expansion.
Oh, yeah.
They jumped from a negative 0.8% a year ago to a positive 9.9%. That expansion generated $14.3 million in gross profit.
Okay, let's unpack this. How do you jump from negative margins to nearly 10% in an environment this challenging?
Well, it comes down to regional execution.
Yeah.
Brazil was the absolute standout here. Sales there jumped 17.7%, and get this, margins hit a massive 22.7%.
Wow, 22.7%.
Yeah, as they capitalized on regional demand and just really optimized their local production. Meanwhile, in the Americas segment, sales were totally flat, but margins improved massively anyway.
Right, and that's due to their cost-cutting initiatives.
Yeah.
It's basically classic corporate triage. Like when you apply triage, you aren't trying to heal the whole body at once.
Well, exactly.
You're just stopping the bleeding by cutting out unprofitable product lines to ensure the core business survives. Unifi restructured their manufacturing footprint to lower their revenue break-even point. And they lowered it so aggressively that even with flat sales in the Americas, they are suddenly printing cash.
It is impressive. And what's fascinating here is how that internal discipline sets up management's strategic pivot. CEO Eddie Engel actually noted Unifi is at a pivot point. Because the bleeding has stopped, they are shifting focus purely toward revenue growth.
And a major piece of that strategy relies on their margin accretive products, right?
Right. Specifically, their Repreve recycled fibers, which already make up 28% of their sales. They're also freeing up cash to aggressively deleverage. They just announced a $60 million sale of non-strategic U.S. real estate.
Which is huge.
Yeah, it's going to take a massive bite out of their $67.4 million net debt.
Okay, but wait, here is where I have to push back.
Yeah.
Selling off $60 million in real estate to pay down debt is a great lifeline, but, I mean, isn't that just a one-time trick?
Well, sure.
I'm struggling to see how they grow top-line revenue organically in this macro environment once there's no more real estate left to sell.
That is the crucial question, and it's the exact tension Wall Street is pricing in right now. Because while the Americas and Brazil are optimized, Unifi is facing serious external headwinds.
Mostly in Asia.
Yeah. Their Asia segment remains heavily pressured by ongoing geopolitical tensions, trade restrictions, and just general international tariff uncertainties.
Which explains why some analysts are hitting the brakes. Looking at the notes from Sidoti, they actually cut Unifi's fiscal 2027 EPS estimates all the way down to 0.
Wow. To 0.
Yeah, they clearly aren't buying the organic growth narrative.
No, and if we connect this to the bigger picture, corporate triage and asset liquidation can definitely save your balance sheet in the short term. But management can't dictate global trade policy. If tariffs escalate, Unifi's international operations could remain a really heavy drag on that top-line growth they're looking for.
So the triage worked, the patient is stabilized, but they're walking right out of the hospital into an economic storm. Which leaves you, the listener, with something interesting to ponder. Unifi is pushing aggressively into non-apparel markets right now, things like packaging and military applications.
Which could be a lifeline.
It could be. Will that pivot make recycled synthetic yarn a resilient global staple? Or are they destined to remain a cyclical casualty of international tariffs?
Yeah, it's going to be a fascinating stress test for their new, leaner business model. We'll have to see if these new end markets offer the shelter they need.
Definitely a key metric to watch in the coming quarters. Make sure to follow the show for your daily earnings coverage.